Hello everybody, this is Toni Turner and welcome to the Market Now as of the market's close on Friday, June 15th. Well, Wall Street stocks ended lower today, capping a day of heavy trading, with investors mostly pulling back from initial concerns over an escalating trade dispute between the United States and China. Today was also Quadruple Witching Day, the quarterly simultaneous expiration of U.S. options and futures contracts, which tend to boost trading volume as investors replace expiring positions. And on that note, let's go to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you know, this is the exchange-traded fund that closely follows our benchmark S&P index. Now, we all know that the SPY made an all-time closing high of $286.58 since January 26th. Since then, it's tumbled in a really dramatic fall, I'm sure you're all aware of, down to its 200-day moving average and intraday low on February 9th at 253. But since then, the 200-day moving average has acted as very strong potential support. And after dipping 2 more times right here in April and again in May, the SPY is now moving in a short-term uptrend. And you can see this uptrend as I've outlined it with these blue lines. So we have the uptrend line here, the channel line here. When I captured this chart today at the close, the S&P 500 SPDR was trading at $277.13, right around $27.71 on the S&P 500 itself. Now, as you can see here, in the last 2 months, in May and June, volatility is quieted down quite a bit. The candles aren't as large, or I should say as tall, as they were back in February and March. So that means that there is less friction, less fear in the markets as it is now climbing, doing its very best to stay in this short-term uptrend, walking up its 20-day moving average, the red line. It's also, of course, nicely above its rising 50-day moving average, which comes in here at about 270. We can also look at this 270 as potential support. We can also look at the 20-day moving average as potential support. 20-day comes in here at almost $275. The 50-day comes in at $270. Of course, we have the 200-day moving average still rising, which is bullish, and it's coming in now at $265.28. So nice uptrend we have intact here. We can draw a real short-term trend line coming up here, and of course that comes up right under today's low, and it comes up right at 274.80 along with the 20-day moving average. So that could provide pretty nice support right in here, although it's not far away from today's low. It could provide pretty nice support here at around 274 or so. Again, we have potential support at the 50-day and at that price, and down at the 200-day and that uptrend line. So what we should know here is that the 14-day RSI is almost overbought. It's coming in at 59.20, which is okay. The overbought sign for the RSI would be when when this momentum indicator rises above 70. So not too bad here, but pretty close to an overbought condition. So we will see in the coming week if this market benchmark can maintain its upward momentum and continue making higher lows and higher highs, which is what we have to do for an uptrend. Or in case if it needs to retrace a little, we have plenty of support here. So we'll, fingers crossed, this stays in an uptrend. Certainly bull markets are a lot more fun than downward sloping markets. Now, our next chart we're going to look at here is the PowerShares QQQ. As you all know, this is This is the representative of the NASDAQ 100. The NASDAQ 100 is the top, by market capitalization, the top 100 stocks, non-financial stocks in the NASDAQ stock market. And again, they're measured by their market cap or market capitalization. The QQQ is fueled by the likes of Amazon, Microsoft, Intel, Facebook, Alphabet, all the usual suspects here. Now it's making a series of all-time new highs, and yesterday, Thursday, it made an all-time closing high at $177.60. Very nice. Today's close was $176.98. Now, like the SPY, the QQQ has been climbing in a short-term uptrend since it's touched its April lows down here, making a higher low. So that said, all right, we're starting to move up here at about 154, and so far it's continuing this uptrend, and it's a really sweet one. It's getting a little overdone here, but we'll see. We should note that the RSI for the QQQ is overbought and actually is trading right at the 70 line. It's been up here now at this 70 line on the RSI since about the first week of this month. And so at some point when the RSI gets above 70 or right around it, at some point we usually do see a pullback, however slight. And we can see that if you look back here in November of 17, right here where my cursor is, look at the RSI, how it was overbought. And yes, we got a pullback. Of course, it got way overbought in January of 2018. Very steep rise here. Steep rises will do that to price. When it gets so far, people start taking profits, and then price starts down again. Not saying it will happen here. We have a little less volatility here, but still we need to be wise and take note that the QQQ is overbought, and we have a lot of tech stocks in our portfolio. Maybe, just maybe, we take a few profits on the short-term positions. Okay, so again, it closed today at $176.98. We'll see in the coming week if it can continue its uptrend into blue sky territory where it now resides, and if the bulls can in fact hold their grounds when the QQQ is overbought. For our final chart today, we're going to look at one we could almost call a bottom fishing trade. This is the iShares US Telecommunications ETF. Top components are Cisco, Verizon, AT&T, Palo Alto Networks, Motorola. The symbol for the iShares Telecom ETF is IYZ. Now, you can't see it on this chart, but it touched a recent high of note, was at $36.74 on January of 2017. Again, you can't see it on this chart. But that gives you an idea of where it's been. Now, it's been sliding in a downtrend in recent months. You can certainly see that. And we can extend this downtrend line. If I could draw a straight line, it has been moving in a downtrend. A lot of that has to do with the Fed raising interest rates. I won't go into all of that now, but that does make telecom stocks, which are known for very nice, sweet dividends, it does always give them a little trouble when the Fed starts raising interest rates. So it's been in a downtrend here until it got to this low of 26.37 in April. Then it started forming a triangle pattern when it made a higher low right here in May. And so it formed, we had this downtrend line coming down overhead for sure, but then we could start drawing a line here when it made a higher low, and it got even better when we see another higher low here right in the beginning of June. So you see this higher low here, and then it broke up and out and over its 20 and 50-day moving averages just with little baby steps here in the last week and a half. The closing price today on the IYZ was $28.06. I'm going to keep an eye on the IYZ in the coming week, and if it remains positive and the market remains positive, I may add shares to my portfolio. As usual, my initial protective stop is a close below the 50-day moving average. Now we will note here that the 200-day moving average is coming down overhead. This is a powerful line that can exert some resistance on any stock or ETF trying to move up into it. It's pretty far away right now, but the 200-day moving average is coming in at $28.80. Now, if the IYZ continues to climb, this line will start to soften and move more horizontally, perhaps by the time, if and when the IYZ actually moves up to the 200-day moving average. Remember that moving averages that are overhead priced but moving horizontally have far less resistance power than do moving averages that are moving down at an angle like this. So again, if the IYZ can continue to rise, it will cause the 200-day moving average to soften and become easier to overcome, as I said, when and if the IYZ gets there. It will at some point. We just don't know when. So again, my stop is below the 50-day moving average to start, a close below that. I will raise my stop if and when the IYZ makes it up to the 200-day moving average. We've got nice volume on this, and it looks as though it may move higher, but you never know. You never know. If the market moves down in the coming week, I suspect the IYZ will as well. So take care, but this looks like it could turn into something good if you'd like to keep an eye on it. And now we're going on to the next week's economic reports, but first, I want to take a moment to tell you about my new online training, Trade the Trend to Profits. During this 2-hour recorded webinar, I'll show you how to take 20, 30, even 50% or more out of trend trades. This is the easiest and most straightforward way to buy stocks and ETFs at a low price, that is, with trend trading rules, and then sell them for a substantial profit. Check Trade the Trend to Profits out now because we are offering it at a 20% discount. Now, my strategy for these trades is extremely simple and easy to apply, and the profits can be fantastic, so don't miss out. This offer ends tomorrow. For more information, simply click on the orange button below or go to the link you see on this at the bottom of this screen, http://specials.tonyturner.com/trade the trend, or again, click on the orange button below. Now for our economic reports this week. On Monday, not much going on. On Tuesday, we have building permits. On Wednesday, we have existing home sales and crude inventories, our usual crude inventories. Thursday, we have our usual jobless claims, the Philadelphia Fed, and natural gas inventories as usual. Friday, we have PCE prices. That's an important report for the Fed. And remember, this is your chance to learn how to make highly profitable trend trades with clarity and confidence. And trend trades are great for summer months because you don't have to sit. In fact, it's better if you don't. Don't sit and stare at these trades. You simply put in your stop and let it go. Good for summer trades. Don't miss out on this exciting program, Trade the Trend to Profits, and your chance to get it at a 20% discount. Again, this offer will end tomorrow. For more information, please click on the orange button below or go to the link you see on this screen. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.